Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 6, 2024, and we're diving into Westlake's third quarter earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Westlake, a global leader in materials and innovative products, has just released its Q3 2024 earnings. Let's break down the numbers and see how they performed this quarter.
Revenue and profitability overview. Let's start with the top line. Westlake reported net sales of $3.1 billion for the third quarter of 2024. John, how does this compare to previous quarters?
Net sales remained relatively stable compared to the same period last year, showing a slight decrease from the previous quarter. The company faced challenges such as extended maintenance outages, which impacted their production and sales volume. Despite these hurdles, they managed to maintain a steady revenue stream.
And what about profitability?
Net income was $183 million, translating to an earnings per share of 1.41 cents. This is a decrease from the previous quarter, primarily due to higher ethylene feedstock costs and lower sales volume. However, the EBITDA of $580 million indicates that Westlake is still maintaining a solid operational performance despite these challenges.
Segment performance analysis. John, can you give us an overview of how Westlake's segments performed this quarter?
Sure. The Performance and Essential Materials segment reported sales of $2 billion, which is consistent with the previous quarter. However, the segment's income from operations decreased significantly due to unplanned outages and higher feedstock costs. On the other hand, the Housing and Infrastructure Products HYPE segment saw a decline in sales to $1.1 billion, mainly due to slower North American residential construction activity.
How did these factors affect their EBITDA?
The PEM segment's EBITDA, excluding identified items, was $297 million, reflecting the operational challenges they faced. Meanwhile, the HIP segment's EBITDA was $262 million, down from the previous quarter, impacted by lower sales volume and pricing pressures.
Strategic initiatives and future outlook. Westlake has also announced some strategic initiatives. Can you elaborate on these, John?
Yes, the company accrued $75 million in mothball expenses to temporarily cease operations at certain facilities in Europe. This is part of their strategy to align their manufacturing footprint with global market conditions. Despite these expenses, Westlake generated $474 million in cash flow from operations, which is a positive sign of their financial health.
What did the CEO have to say about the future?
CEO Jean-Marc Gilson emphasized the company's focus on growth through innovation and improving plant reliability. He acknowledged the operational setbacks, but expressed optimism about the macroeconomic recovery, particularly with recent fiscal stimuli in key markets. Westlake aims to leverage these conditions to enhance shareholder value.
Key takeaways. In summary, Westlake faced some operational challenges this quarter, but they continue to show resilience with a strong cash flow and strategic focus on growth. John, any final thoughts on their investment prospects?
Westlake's ability to maintain a solid cash flow and their strategic initiatives to optimize operations position them well for future growth. Investors should keep an eye on their ability to navigate market conditions and execute their growth strategies effectively.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Westlake's performance in the comments below.